So let's do a progression. Ready, aim, fire. We talked about this in yesterday's highlight. It's if you're looking to find a bounce, find an area, and you're bullish that you think the market's going to rally away from. You want to see some big sellers that the market absorbs and maybe laughs at, as we say. You start to see that in these purple boxes. You want to see longs get pushed off the boat, or puke, as we say, which are these green bars, hollow bars here that my cursor is over. When you take a look at these bars, my eyes glance up to these bars. If they're sticking out a lot on these bars up here, that means relative to the last 15 or so hours, it's a lot because this is all done on scale. Gives you a little bit more, um, weight to how many longs actually puked. We had the biggest long puke here at 55, and the market did find temporary bottom swing lows here and here. Well, this one isn't done. And so if I fast forward it a little bit, you see a bunch more longs puke. Now, there's a difference between longs getting in and longs puking. Longs getting in, we show with these green bars. The hollow green is longs puking. That's a sell stop, as we tag them. A sell stop turns into a sell market order once that price gets triggered. Everybody should know that. Well, what everybody doesn't know is we're able to tag when that sell market order originated as sell stop. We also know that most people use sell stops to exit long positions. That's why we show it as a green hollow bar. Now, as I fast forward it, it gets through that iceberg and a whole bunch more longs puke that if you added all these up, it's going to be bigger than this one right here. So you see these big sell orders come in and the market gets above them, uses this green iceberg to kind of shake out longs that are leaning on it. But this is where most of the longs came in succession. Boom, 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 boom. And if you add all this up, it's going to even be more than this single one up here at 55. A lot of times when you cross back through an iceberg, that's bullish. So meaning you go through it and then cross back north of it. But you want to see the market jump and laugh at the big sell orders. You want to see shorts come in, and you already have the longs puking. Why is it significant for longs to puke, and why you would want longs to puke before you get long? Because it's less competition. If you're long, you don't want more longs. You want less longs. And you could see then two big buy orders come in and the market goes in the direction it's supposed to go. So you got all these longs that puke. You got a decent amount of shorts maybe stuck here at 48 in the hole. And then the market finds the buy orders and rallies. Is it better to be long somewhere down in here? Yes. But as a pullback down to an area where you have these shorts that are stuck is also an opportunity. Market rallies. Soon as the red laser goes to green, back to red, stays bullish, goes to green, generally gets bearish again, and we can go back and forth on that all day. It's important to know, though, longs puking. When a market is going down, it's obvious that that's when you're going to get longs to puke because they're being squeezed. It's going against them. That's where sell stops are, below the market. Sell stops are below, buy stops are above. Most people have to think about that for a while. If you trade, you should know that. Sell stops are always below where price is, buy stops are above. Sell stops get elected, they turn into sell market orders. They turn into sell market orders. Sometimes they'll only go 3, 4, 5 and slip. Sometimes they could slip, depending on how you have it set, indefinitely. Or sometimes I think there's maybe a 50 or 100 tick limit. But everybody knows, or should certainly know, the definition of slippage. And your stop slip, that means, this is another thing people should know. Why does it slip? It slips because your sell market order goes to hit, let's say, the price of 53. Let's just throw a price out there. 53 is our bid. Your sell market order goes to sell it and there's no buyers there. Then it goes to sell 52.75, no buyers. Someone's beating you. Slip, 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 slip until the first buyer you're able to hit. But either way, sell stops are below the market. And you also should know that most people overwhelmingly use sell stops to get out of a long trade. And generally, that long position was a loser. Do people use sell stops to enter a short trade? Yes. Do people use sell stops to trail or lock in a profit? Yes. But overwhelmingly, most people use sell stops to exit a long trade and that trade for a loser. So knowing where they come out, and the slang word that we use is puke. That was from my days on the trading floor. Knowing where they come out is a big advantage.